Come on, man. Oh, there we go. So how do I know what I look like on screen? Sorry, folks. I'm trying this new technology, and it's not sharing with me. I'll have to see what happens. I'll have to see what happens. I'll have to see what happens. Welcome, folks, back to another Hump Day Real Estate with Kendall in the DMV. Today, we're going to talk about three things that every home buyer must do before shopping for a home. Ev- Three things a home buyer should do before shopping for a home. And let me tell you something. Most home buyers skip three things before they start shopping, and it quietly kills their deal before they ever find the right home. And one of them, I promise you, is something that you think you've already done. So I want to tell you about a client of mine. Matter of fact, it was a couple, first time buyers, and they had been saving for some years, right? They knew exactly what neighborhood they wanted. They had already toured probably about a dozen homes on weekends just to get a feel for the market. Well, they called me and they were super excited. Man, why are these folks so excited, right? That they had found the one, three bedrooms, two baths, a backyard for their dog that they loved so much. They were ready to move. Here's what went wrong. When we sat down to write the offer, I asked them one question. This is a big question. Where's your pre-approval letter? And they said, well, we talked to Linda a couple of months ago, and she said we were good. I said, okay, then we shouldn't have a problem with getting a pre-approval letter. Well, found out they were pre-qualified, not pre-approved. Two completely different things, folks. And by the time we got their real pre-approval, the house was gone. That house was gone. That moment right there is exactly why I'm doing this episode tonight. Folks, that story is not rare. I've seen it happen over and over and over and over and over and over again. Now, this not saying buyers aren't smart, right? Because but what it's saying is nobody, no, I'm not gonna say nobody. They didn't sit down with a real estate professional or realtor or real estate agent or loan officer. I'm going to keep it on the real estate side because sometimes loan officers just, I think they're doing things, that pre-qualification. I think that's a whole nother subject. I'm not even going to get on that. But to actually walk through the process of what you need to get started. Now, what most people don't like to hear because people feel like they make good money. They want to do what they want to do, but they can't because they have to understand that everything has a process. You have to follow the process. So tonight, that's exactly what we're doing. Three things in order. And if you do all three before you ever set foot in an open house, you will be in completely different position than the majority of buyers that you ever run across today or forever. This is the one I mentioned in the story. And I'm leading with it because it is the one that trips people up more than anything else. Pre-qualification is a conversation. You call a lender, you text them your income, you basically you text them your income, you tell them roughly how much you make. They make all kind of calculations. You say, hey, I worked 2 years at this job, etc. Listening to that, you see how that can be a little funky. Would you ever want to be a part of doing something where somebody just gave you a bunch of verbal information and you weren't able to be able now think of let's say this, would you ever want to lend somebody money and they just tell you a bunch of stuff to get you to lend the money, but you have no factual information to say how they can repay? These are the things you want to think about, folks. Think about it the exact same way you would lend money. This is how you want, and you want this yourself as well, because when things are done in a process, it don't just help the person that's lending the money, it also help you, because and we're going to talk about that a little bit. But so let's go to the next thing. Pre-approval is a process. Now, they pull your credit. So some of y'all don't like that, right? You don't want your credit pulled. Don't let that be a thing that happen, right? They review your W-2s and your tax returns. And yes, they need to look at your bank statements. They verify your employment, and then based on the actual documentation, they issue a letter that says the buyer is pre-approved to borrow up to this amount. Why does this matter so much? Well, because first off, you want to be competitive when you're doing anything, right? I know you folks out there don't want to be soft when you're trying to make a move or doing any type of business. If you played sports, you want to be competitive, right? So sellers and their agents are trained to spot the difference when you don't have things all together. If I'm the listing agent and buyer comes to me and you come and the agent brings you to me and they say something about a pre-qualification, I want to let you know right now, I'm not saying your offer won't get looked at, but I'm without saying anything, you that's all I'm gonna say. So when you submit an offer with a pre-qualification letter, it signals to them that this deal might fall apart. I guess I would say something without saying it then, right? When you submit an offer with a full pre-approval, it signals that you're a real buyer and a real buyer who could possibly close. Now, there's some limitations on the pre-approval as well, but the pre-approval is hardcore. This means all of those things we mentioned. You got your credit pulled. You submitted your documentation. Everything that they asked you for, you basically provided, right? So there are also a few things that commonly surprise buyers during the pre-approval process. Things that they didn't really know would affect them, right? Your credit score matters more than people realize. Most conventional loans want to see a 620 or above credit score. And the higher your score, the better your interest rate. Your debt to income ratio, that's what you owe every month versus what you earn. And this is another huge factor, right? Because what the lender wants to make sure is you can afford the payment that you're going to get. That's what you guys need to really take into consideration. That not just the fact that you make six figures and you want to buy this or that, but the fact that from what you make with the bills that you already have, can you afford what you're trying to get yourself into? And your employment, again, if you only been at your job for 6 months, how can you confirm that you can be stable enough to make a $3,000 a month payment? Now, don't get me wrong. I know you guys do it on the rental side, right? But the landlord, they can take that risk and have to go to court to get you out. But somebody lending you two, three, four, 500, $1 million, they're not going to take that risk. So lenders want to see at least 2 years of consistent income history. 2 years of consistent income history. So my advice to you guys, right? Get your pre-approval done before you do anything else, before you browse Zillow seriously, like before you start really going on Zillow and start clicking names of real estate agents because you want to go see a house because you think that's just the thing. Before you even start talking about what neighborhoods you like. Because until you have that letter in hand, folks, you don't actually know what you're working with. You got to know what you're working with. So the next thing is we got to really know the budget and not just your approval number. So they approved you for 400,000. Do you really want a payment that come with 400,000, or a payment with 300,000 might make more sense? So it's never a thing about, and we're gonna get to it a little bit, but I want to summarize this a little bit. Don't get caught up in what they say you can be approved for. Get caught up in the fact that you just got approved, and now you can go shop for something affordable, right? Something affordable. Just not because you can get approved for $1 million house doesn't mean you should go buy $1 million house. You need to go and buy the house that you can safely afford the payment, right? So now here's where I need you to really pay attention, right? Because this step, most buyers who did their pre-approval sometimes skip. And your pre-approval number, again, and your budget are two different things. So we're going right back into that same thing. A lender might approve you for 450,000. That's the ceiling. That's your max. That's the most house you can basically afford, right? But what does 450,000 actually look like on a monthly basis? So let's break that down real quick. So if you've got a principal and interest, that's the core payment on the loan itself. Then you've got property taxes, which vary significantly depending on the city, county you're buying in. Then you got homeowners insurance, right? You guys ain't know all this, right? And if your down payment is less than 20%, you're likely to get what's called PMI, private mortgage insurance. On top of all of that we just got finished talking about, right? Property taxes, homeowners insurance, all this stuff, and they gonna put principal mortgage insurance on top of it. And if the home is in a community with a homeowners association, now you just put HOA fees on top of that. So when you stack all of those together, right, you can easily be looking at a monthly payment that is 500 to 800 more than people expected based on just the loan amount alone, right? So how do you find the real numbers? You start with your take home pay, not your gross income, your actual take home. Then you subtract every fixed expense you have: car payments, student loans, subscriptions, childcare, utilities, everything that comes out every month, whether you want it or not. Now, what's left? That's your discretionary income. And your mortgage payment should be a comfortable portion of that, not something that leaves you with nothing. A common guideline that your total housing cost should be no more than 28 or 30% of your gross monthly income. But that's just a guideline, right? That's not a rule. You know your lifestyle. You know what makes you comfortable, right? So I see buyers get house poor all the time, right? They stretch to the top of the approval, they close on a home, and then they realize, man, I can't afford to put a living room set in the living room, let alone think about putting something in the dining room. Oh, wait a minute, do I even have a bedroom set? Oh, and mind you, they buying around March during the peak of the housing market season, right? When think well, not the peak, when things start to heat up. And well, they were supposed to go on vacation in June or July. Well, after you try to do everything in regards to getting into this house, and you close on the house in April, well, how much money do you think you really might have to still go on that vacation? Hmm. Think about that for a quick second. Quick second. Oh man, every unexpected expense becomes a creaking crisis, right? Oh my goodness, I just spent this for that, just spent this for this, and oh, I, for- I supposed to go to wherever in June. Oh, I gotta take care of this on my car. The kids got this, that, this. Oh, you can get yourself in some big trouble. So the goal isn't to buy the most expensive home you qualify for. The goal is to buy a home that fits your life. So before you start looking, sit down with actual numbers, not for surely the lender's numbers, your actual numbers, and decide what you can genuinely afford every month. Then find homes in that range. You'll thank yourself later. So the next step is you got to choose the right agent before you start shopping, right? You got to choose the right agent before you start shopping. Now, this is something that happens all the time. Most people do this completely backwards, especially you folks that are on Zillow all the time, right? Excuse me. You're on Zillow. There's three agents down at the bottom on the side. Then there's another agent that's actually a listing agent. You guys just go in there and you click and you say, I want to see a house. Then you go and get with these people and you don't want to sign the agreement or any of that stuff. So all of that is backwards. And I get it. I really get it. It feels like you should look at some houses first, get feel for the market, and then find an agent when you're really, really ready. But here's the problem with that approach. By the time you fall in love with a house, you don't have time to properly vet an agent. You just don't. You just grab whoever is available and hope for the best, right? You like, woo! I mean, I hope none of you went to the doctors and that's what you did. Just grab the first person and hope for the best, right? You want to have time to try to get to know that person a little bit. So, and the agent you hire in the moment under that kind of pressure may not actually be working in your best interest. So now you don't even know what you're actually getting yourself into, right? There's something a lot of buyers don't fully understand. So when you walk into an open house, the agent hosting the open house, who do they work for? Do you know? That's do you know? Okay, I'll tell you. They work for the seller. They don't work for you. They work for the seller. And their job is to get the best deal for the seller, right? Which means the highest price, the most favorable terms for the seller, and any information you share with them, what you can afford, it, you're giving information that is it's not what you want to do. Trust me, because these things will be used against you in the negotiation, right? This you're giving up information to somebody that doesn't have a fiduciary obligation to you. They have an obligation to the other party. So a buyer's agent is a good one. Oh, so I take that back. A buyer's agent, a good one, hired before you start, is the person in your corner, right? They're not just opening doors. Excuse me. They're guiding you through your search based on actual criteria. They're analyzing comparable sales in the market that where you're looking at homes at. They're looking for fair prices that you could possibly offer to negotiate for the home that you're interested in. And they're actually writing offers that will protect you. So in that contract, there's some protection in there that that agent will make sure that they put in to protect you once you get into a contract. And guess what? They're going to negotiate the whole thing on your behalf. So there's no misunderstanding of they're working for the seller. No, they're working for you. You're going to have a signed agreement that says that this person works for you. And here's something added that most buyers don't know. You now may have to pay your, well, first face-to-face meeting, you will have to disclose, it will have to be disclosed to you what the fee is for working with your agent, and you'll have to sign that before you be able to go to see any houses. That's across the board. You see anybody doing other than that, that's a problem. So they're going to help catch things that you don't catch: inspection issues, title concerns, neighborhood red flags that you've never spotted on your own, right? You will never have spotted it on your own. So how do you find the right agent? How do you find the right agent? Well, you interview the right agent, right? Yeah, I'm serious. You treat it like a hire, because guess what? You're hiring this person. That's exactly what you're doing. And ask how long they've been in the market. You ask how many buyers they work with in the last 12 months. You ask what neighborhoods they know best. Ask how they communicate. Do they respond quickly? Do they keep you in the loop? And pay attention to how they talk about the process. A great buyer's agent isn't trying to rush you into anything. They're asking you questions about your life, your timeline, what matters to you most. They will also educate you. If an agent is just asking you how much you want to spend and uh, and showing you listing, that's a door open to not a real advocate, right? That person is trying to get to something else. They're not trying to really get you into the home, the situation that you might really want to be into. So lock in your agent first, right? Before the open houses, before the Zillow deep dives, get the right person on your team, and the whole process will be a completely different experience. I promise you that. So let's bring it all together, folks. Before you ever say the words, I'm looking for a home, you need to do the three things: get your pre approval, not just a pre qualification estimate, know your actual monthly budget, not just the number a lender handed to you, right? You're going to look at your own numbers and make your decisions based off of that. And then you're going to hire the actual right buyer's agent before you start looking, not after you've already fallen in love with a house. These three things sound simple, and they are simple, right? But most people skip them all the time. And the buyers who skip them are the ones who end up losing the house, overstretching their finances, or feeling like they have no idea what was happening during the transaction that changed their life. The buyers who do these three things, they show up to the table ready. They move with confidence and they close the deal. That's what I want every one of you watching tonight to accomplish. If this gave you something tonight, drop a comment. Tell me which of the three steps hit closest to home for you. I read every single one and I'll respond. Now I'm on this new platform, so I don't know how it actually worked live. So I'm trying something different. So, and if you know someone who's thinking about buying this year, someone who is already looking at houses without doing any of this, man, share this with them. Seriously, they need to hear before they learn the hard way. Another Hump Day Real Estate with Kendall and the DMV. Hey, signing off. I'll see you next time. Shoot me information in the comments, and we'll get you on your way to home ownership in 2026. Thanks again for stopping by.